Jayesh here from the Regan and Rooy International Tax Team. And today I want to talk to you about some important tax updates following the release of the Finance Bill 2024, with particular attention to the Corporate Climate Responsibility Levy, which was announced by the Minister of Finance in his budget speech last month. I know the big question on everybody's mind is whether the CCR levy would be applicable to global business companies, and the answer is yes. It will apply to GBLs, and this represents a significant change in the Mauritius tax landscape, especially for the offshore sector and what it means for them. Just to recap, the CCR levy will be a 2% levy which will apply to domestic companies, global business companies, resident societies, trusts and foundation, and the turnover have to be more than 50 million rupees or 1.1 million USD. So what will be the impact for these company types, different company categories? The ETR for effective tax rate for global business companies who are already claiming the partial exemption will increase from 3% to 3.4%. So this does not represent a significant change for them. But the burden of the CCR levy will be mostly felt by companies engaged in export and international trading. And usually these international trading companies, they hold GBL licenses. And for them, their effective tax rate will increase from 3% to 5%. So making it an increase of 60% on the tax bill. So they will be mostly affected by this. And other GBLs will be taxed at 15% because their income stream is not eligible for the partial exemption. It will increase to 17%. And domestic companies who already pay the corporate social responsibility levy of 2%, the effective tax rate will increase from 17 to 19%. And another important note is that the CCR levy will be applicable retrospectively, meaning that a company with a financial year end falling after 31st December 2023 will be subject to this additional tax. We are not sure if this was the intention when the bill was drafted, that it would start as from the year assessment 2024-2025, but we still need to wait for confirmation through the Finance Act when it will be published. So then we'll get the confirmation. So moving away from the CCR levy and what is this represents, it's all speculation at the moment. There have been other measures announced and confirmed in the finance bill. New tax incentives for corporates, such as the double and triple deduction on certain donations, and an additional tax credit of 25% on setup costs of child daycare centers. So this is all I have to share with you today, and stay tuned for more news around the CCR levy and the impending release of the Finance Act for more confirmation. Feel free to reach out if you have any questions, and have a good day.